We have Srinivasan, the CFO of Varroc Engineering, joining us right here at ET. Now, that's of course another earnings candidate. We've seen a decent performance, I'd say, from the company in the quarter gone by. So let's understand what lies ahead. Mr. Srinivasan, hi, good morning, and thanks for coming on board. Now, just want to understand.
Good morning. Thanks. Thank you for having me on your show.
Okay. Just want to understand what has led to a healthy expansion in margins, because most of your peers, most OEMs, a lot of them have cited commodity cost pressure as one of the key reasons that dragged their margins. Talk to us about what led to your expansion on the same parameter, and how well are you hedged when it comes to commodities?
Okay. Yeah, good question. In our case, we also have faced some headwinds both on commodity prices as well as exchange rates. But what has primarily helped us in improving our margin is the robust top-line growth that we have been able to achieve in the last quarter. In the India business, we had a growth of about 22% over previous year. And in the global lighting system business, we had a 16% growth in rupee terms and 8% growth in euro terms. Both are much ahead of industry growth, and so that clearly has helped us in getting fixed cost leverage and improving our margins. And in addition, in our lighting system, global lighting system business, we have also been focused on improving operational efficiencies in our Czech operation, which is the biggest manufacturing setup, which is also bearing fruit now, and improved capacity utilization in India. So these are the main factors.
Just want to get in some perspective on what's happening in the two-wheeler space now. Mr. Srinivasan, it's no surprise or it's no secret that the entire industry growth has been muted. Has that not impacted your offtake from biggest clients in any way at all? And if you could also give us some color on how it has been for Bajaj, because Bajaj is the only one which has seen a healthy volume growth in Q3. Versus the industry growth versus individual peers, etc. So on back of that, what is the kind of benefit you've seen? Because they're pushing their economy segment a fair bit. So is that the segment that you've also received majority of orders for?
Okay, again, another good question. Bajaj, I think, as you know, is our biggest customer. About half our revenue in the India business comes from Bajaj. And actually, they have been growing very strongly ahead of market and gaining market share, which works to our advantage because we are very strong with them. And our presence with Bajaj is not only strong in the economy segment, we also have a strong presence in the premium segment. So their volume growth has definitely helped us also to increase our revenue. As a matter of fact, the Bajaj share of revenue in our India business went up from 51% to almost 53% in this quarter, which is good growth. And of course, the overall market itself, the growth rate has slowed down in the Q3 compared to the first half of the year. It's been a bit of subdued demand during festival season, which is a kind of widely known fact at that time. And now we are hoping that things will pick up in Q4 again.
Right. While on one hand you have a player like Bajaj who's seen very robust uptick in volumes, there's also an Enfield which is still under pressure, and it has been the case for many months now. What is the kind of order demand that you're seeing from Royal Enfield? And overall, for the two-wheeler space, like you said, Q3 did not turn out very great, but into Q4, has there been any improvement at all?
Royal Enfield is an important customer for us, and we also have a very strong relationship with them. And of course, they had some short-term setbacks in terms of the disruption in their manufacturing in their Chennai factory and so on. I think they are coming out of that and getting back on the growth path as far as we can see. And overall, yes, as I said, the market growth has slowed down in Q3, and Q4 we hope it will pick up. Early signs are promising, so we are just in the wait and watch mode.
Yeah, but the outlook that you've given in the presentation says that Q4 is weaker than expected. So markets are definitely a bit concerned about the growth prospects of the entire sector and even, key players as yourselves. Now that you're only saying that Q4 growth is looking even below than what was expected, what is the kind of close that we can expect to the year FY19? What are the levels of growth of margins that you hope to close the year on?
See, from a margin perspective, we have been steadily increasing our margin this year over last year, which is due to better capacity utilization, strong top line growth, and so on. So we expect that trend to continue into the fourth quarter. So we should end the year strongly with, let's say, significant margin improvement over last year. So that's the outlook. The reason we have said growth is a little lower than expected because our own internal plans were even more aggressive than what we are seeing at the moment. But we still expect double-digit growth to come through in this quarter. So
Even for the year, right?
even for the year, yes. Very
Okay,
much.
that's a good, that's relieving to hear. But just before we let you go, very quickly on the global lighting business then, there are a lot of uncertainties with respect to Brexit. There's a slowdown that is everybody is, worrying about at this point of time in the Eurozone, in North America, and China has been massively hit. Now, by when do you see the pain ease, or are these the markets which could be a little troubled for the next 6 to 8 months as well?
Yeah, so globally, the automotive sector by nature is a cyclical industry. So it goes through periods of ups and downs. So the common consensus seems to be that globally in the next 12 months or so, there will be a kind of a slowdown and before it picks up again. That seems to be the general consensus. What we are seeing specifically, which we have highlighted in our investor presentation, is Europe was facing headwinds because of the new diesel regulations and the Brexit related uncertainties. And in China, there have been a number of factors playing out, like trade sanctions, the slowing down of the economic growth, and also the lack of momentum in the real estate market and the share market, which also impacts discretionary purchases like automobiles and so on. So combination of that factors also meant for the first time, I think in 20 years, the automobile market has actually degrown in the Q3 compared. So this is a new phenomena we are seeing. So we are waiting to see what kind of measures the Chinese government takes to stimulate demand and growth in the overall economy and also specific to automotive sector. So we hope there will be some remedial measures taken which will help rekindle the growth going into the next financial year. So, but we have our plans made out for all different scenarios, so we should be able to cope with that. So.
Okay. That's good to hear, Mr. Srinivasan. Thanks much for taking time out to chat with us about what transpired in the quarter gone by and what could be in store for the coming quarters. However, the stock of Varroc Engineering continues to be punished by the street. Not too enthused about the numbers delivered, down 2.1% in trade at the day's lowest point.